Good morning and welcome to the Gold, Goats, and Guns podcast. This is episode 7, and I have with me a great pleasure to chat with independent trade analyst Yra Harris. He's got 42 years of experience trading global macro. He's managed hedge funds. He's been on the only 4 trader to ever sit on a CFTC oversight committee in Washington, and is presently back on the CME Group's board of directors. I've watched interviews with Ira on places like Greg Hunter, and I remember being introduced to Ira through Jim Sinclair years ago when I think I had hair. So Ira, it's a great pleasure to finally meet you, because I remember when Jim told all of us and all of his followers that you had brought back into print the Bernard Connolly's The Rotten Heart of Europe, which is how you and I set up this meeting, because I mentioned it in an article I wrote earlier in the week about Germany. And I just it was great that you're willing to sit down and chat with me this morning. So I want to chat about that and just what you see in the markets today, and, all of what we can see what we can get done in about 30, 35 minutes or so. Okay. So good morning, Ira. Thank you.
Thanks, Tom.
You're more than welcome. So, let's start with that. I mean, again, before we came on the air, I know you were mentioning to me your relationship with this book and how much you paid originally to get your copy of it, and then felt strongly enough to then go out of your way to get a new version of it printed, a new edition of it printed. You want to talk about that a little bit and talk about what the book's actually about and why it's so important? Well,
yeah, I actually, a good friend of mine, Bill Shepard, who's also on the CME board, but a very bright and forward-looking guy who I'd introduced Connolly. I introduced Connolly to him, and when we found out that we really couldn't find the book, we actually paid to have out of our own pocket, and nothing to Bernard, but just we felt the book was so important, and the only thing that Bernard had to do was to write a new forward, because the original book was published in 1995. So Bernard wrote a new forward. That was the agreement to get it out there. And we went to the publishers, Faber and Faber, and we paid for it. And we've been selling copies or giving them away to certain educators. But it's amazing those who won't take it up even for free, just to get it read. And again, it's not with any political bent. It's just to introduce you to somebody who's phenomenally knowledgeable, one of the brightest guys in global macro I've ever met. And we brought the book back, and it's been out there. We've probably disposed of in a very productive way of about 4,000 copies. And we're not making money on this book. Right. Trust me, anybody who can hear me, if you are teaching, if you want to get a book, you can order them through the Rotten Heart of Europe at gmail.com, and I'll respond to you and I'll send you a book. And a lot of times I'll send out extra ones, so you should give them away. As Tom, as you know, it's not an easy read.
No,
but
it's not.
If you read the introduction, that was the new introduction, 2012, you'd be up to speed to where most people are. But as I like to say, the book, you can't really understand what goes on in Europe this is like going to a baseball game. I'm a big baseball fan, so I'll speak in baseball metaphors. Without having a program, you don't know who the players are. Well, right. This book is so much of that. So you can see this is not new things. Bernard wrote this, and he saw everything that was unfolded, and it's so prophetic. Mm-hmm. It's so prophetic. Bernard is not. He writes. If the book was written in a more mass sense, it'd be people would. I'm telling you, it would be always a bestseller, because that's how much is in there. And it's really, as Tom, as you said, it's worth having it on your shelf just as a reference guide. Yes. So for the $10, it's so worth it if you're involved in the world of trading whatsoever, and you trade a lot of things in Europe. And I'll tell you, I've been before I met Bernard, I knew a lot about Europe because my education is in this realm. Mm-hmm. And just Bernard and I would have great conversations. One day we stood on a corner in New York. Out in front, we had bought Starbucks. He had tea, I had coffee. Him being British, he had tea. And we stood for 3 hours on a cement concrete post with my coffee and his tea and talked about Europe. That was probably in around 2014. 3 hours. We still.
Oh yeah. Well, I know, I was telling you before we got started today that I tend to be a chatterbox, and because once you start talking about these issues, and I was chatting with, I did a podcast with Lee Stranahan a year ago, and we went 3 hours, and it was just almost, it started as a get to know you kind of thing, and before you knew it, we were talking about everything. We were sharing stories about our kids and the whole 9 yards, and all of the big issues that are happening in politics and technology and all the other things that were happening. So I get into this all the time. You can't stop. Once you start talking with someone who's on your level of passion about a particular subject, it just goes. Time just flies, and that's that. So what's interesting, and to me, what's really interesting about the book is, and I'll be honest with you up front, I have not read the whole thing, because when I first bought it, I didn't understand 90% of what was going on, because I really didn't understand currency markets as well as I should have, and a variety of other things. But of course, at the time, I wasn't a professional either. I would hard call myself a professional today. But I'm reading it again as I was preparing for this talk this morning, and I'm like, oh my God, it's even worse than I thought. And I'm a cynical guy. You and I met 10 minutes ago, and I'm a cynical guy. And I'm like, these people are even more depraved than I thought they were. And that's saying something, because I'm kind of like the definition of black pilled. So, I cannot recommend, this. I'm also reading, I got, as I mentioned in my article, I got the book from, the current, head of the Hungarian central bank, Tulsi, from a reader of mine in Hungary. She sent it to me. And that book is unbelievable. And I read the first 35 or 40 pages of that. And it really does help to confirm all the things that Bernard's talking about in this book. So, for us to truly understand, the depth of how broken the euro and the European political / fiscal union is, and certainly now that we're on the cusp of them trying to push that fiscal union together, and I think part of what's going to come out of what I think is the upcoming sovereign debt crisis, it's important that we read, that everybody gets as much of an understanding of the background as to who, the what's, the where, the hows, and the whys as to what's going on. So it's crazy, just crazy.
Yeah, no, it's but you say that, and people have known me. I've had portfolio managers who manage some things for me, stocks. I don't like doing that, but in this world, there's only so much time in your day, and they would call me and say, "Well, we're going into Europe." I said, "Well, I'd close my account. I'm out of here."
Right.
Because you should know from everything we discuss and the fact that I blog, and that's a non-starter. But with that being said, I'm actually getting a tint bullish on Europe right now, because I look at Lagarde, and when I was on with Santelli, it was the day of, or the day that they announced her appointment, and I thought it was a bad appointment, because from a central bank that's saddled with all kinds of, they have unlimited powers because Draghi saw to that, and they've taken on a lot of responsibility, that Lagarde would not be the choice to manage the responsibility that Draghi was leaving his successor with. But I will say this, Lagarde has, and this is why I really believe she was appointed, she has the political heft to get two things done. And you see it. One is that she's going to push them for massive fiscal stimulus, and whether that comes through a green type of infrastructure build-out program, which is going to be monstrous, and two, to bring to fruition what George Soros and others have pushed, and Bernard really says it too, because when they only went to the currency with no fiscal harmonization, there's no fiscal harmonization in Europe.
Right.
That's what makes listen, it's not only Bernard, but Martin Feldstein back in the 90s said it, and one of the greatest articles written about it was Rudy Dornbush at MIT. He had a foreign affairs article, I think in 1996 or 97, talking about the flaws and the fact that there is no fiscal harmonization, and there's no euro bond. It's
Right.
when the ECB comes and does their QE, they buy all the different
Right.
nationality sovereign bonds.
Right.
There is no euro bond.
No, there isn't. And yeah, it's a part that Martin Armstrong makes all the time as well, saying that, the flaw of the euro is that you don't have one issuer of sovereign debt for the whole of the EU, and therefore it would be like Illinois issuing U.S. Treasury debt, is the way he puts it, and which is a great way of putting it. And he's the one that finally convinced me, because back in the day I was purely a gold guy and very much kind of an Austrian and not really looking at the nuances of this stuff. And it was over time that he convinced me that the euro was fundamentally flawed. And I absolutely believe that today. And so, yeah, I can see what you're saying about Lagarde, that's what she's going to bring forward. I think the mechanisms by which she's doing that, she has to, in some way, kind of almost blackmail the German people with a huge write down of the Target 2 liabilities or something along those lines in order to get this done. I think that's, looking at the way this is going to play out, I think that's what's going to happen, or something along those lines.
Well, you're right, because it falls to Germany. Now, of course, the rest of Europe will tell the Germans, hey, you owe us this, and you'll hear this language. You owe us this because you've been existing with a cheap, with an undervalued currency relative to, and it is true. This is true.
Absolutely.
Had Germany been on its own, the Deutschmark would have been at ungodly levels. There wouldn't have been the pressure on the Swiss franc because people would have wanted to be invested in Germany. You know, just like when the yen soared. So the Germans did avail themselves, outside of having the right policies in place, going back to the governor, the chancellorship of Gerhard Schroeder when he started down that road of Hartz IV. And this gets very interesting because I was having a conversation with a German reader of mine and somebody who pays attention to things that I say and write. And we were talking on Thursday, I believe it was, about the SPD, the Social Democrats moving to the left. And he said, look, part of that move is the breaking of the social contract. In Germany, there has been a social contract. And that was with Gerhard Schroeder and the Hartz IV, which is German unions wouldn't be aggressive in pushing for wage increases. And therefore, German corporations would keep jobs in Germany rather than moving them to Eastern Europe.
Right.
Because that's what this is. This really, the concept of the EU, when it initially took place, was very similar to NAFTA, which is creating a cheap labor pool for European manufacturers. Right. I mean, that
makes sense. Right. Yeah, that makes perfect sense.
Yeah. So they were going down that route, but so the German unions who have always been aggressive, and every year or every 2 or 3 years they would have negotiations about wage increases, but they were willing to bite the bullet and take very little so that German business corporations would not be moving jobs east. Right. Well, from what our conversation was, jobs are starting to move more aggressively east, and living in Germany, the cost of living is very high for some people, some workers. So they're actually taking jobs in Spain and other places, because in the EU, you can now transit to work. So you have German workers. Now, I don't know how much this is taking place. I haven't seen the real numbers yet, but if that's the case, then the Social Democrats have to move left and back to their original position, which is protecting, workers. It is. So that is going on, because one of the negative things from the ECB program, of course, is that inflation in Germany has outpaced growth. And that is not a good thing. But I think, that was part of the design of it all, which is, we got together through Richard Benugli, who runs the Financial Repression Authority. Right. Well, the one thing that you can be sure of that the ECB QE program has been to repress German savers, because Germany are the most prolific savers. And who's got decimated, just like in the United States, under the Bernanke regime with his portfolio balance channel, who's got decimated? Savers. Savers have gotten destroyed over the last 10 years by design.
Yeah,
By
no,
design.
by
This
design.
is not
Absolutely.
new. We did the same thing in this country after World War II with the Treasury forcing the Fed to hold the line on rates because there was a lot of debt to be repaid. You're an Austrian. I heard you say it.
Right. Yeah.
What Austrians bring to the table, and when I was in graduate school studying political economy, because that's what I thought I wanted to do with my life, is to be a professor. And I had great teachers at the University of Wisconsin, great teachers who could teach me about Marx as much as they could teach me about Schumpeter and von Mises and Fischer, everybody from the Austrian school.
Right.
Because that was important, because even the Marxists, in fact, the Marxist thinkers and writers in the 70s were far ahead of anybody else in understanding how the debt being elevated by the OPEC oil prices and how it was being financed was going to wind up in a complete disaster, which it did in the early 80s. We had, the blow up of Continental Bank. These were all the results of debt situations. So as you rightfully say, it's always debt.
Right.
It all comes down to debt. So what are you going to do with it?
Right. Well, we're going to have to either write it all down or inflate it all away. There's this no other. Those are your only options, right? We have one or the other. And we like to say that catastrophic inflation or hyperinflation, hyperdeflation are two sides of the same coin. And it's just a question of what you decide to bring to the table at a policy level. And I think it's very obvious that Lagarde has been brought in to, with the political heft, as you said, to wrangle all these disparate people under the umbrella of the EU in order to accept the fiscal compact and to either write down some of the liabilities against the ECB, or in this case the Bundesbank, or inflate it all away, or a bit of both. I think that we're going to see that. I think that the what I like to call crank space, or financial crank space, is expecting to see MMT, modern monetary theory, applied in Europe before it is applied everywhere else. And they're just going to start printing money at a whole cloth and just handing it out to people. But they have to in order to try and write down this debt. And the savings thing is insane. I mean, I don't know if you saw this week that that we now have, as the German banks are now going to start charging retail depositors for the negative yield on their savings. And I'm like, well, then how is that? So now how do you argue that relative to you've always make the argument that we shouldn't have gold because gold's got a negative carry cost. So now the euro's got a negative carry cost for the retail level saver. Really? Like, you don't think and from an Austrian perspective, from a hard money guy perspective, I'm like, it's so very obvious to me that a lot of the demand, the nascent demand we're seeing in gold, the push and pull we're seeing in gold right now is a mixture of the world is terminally short dollars and worried to death that there's not going to be enough to cover the liquidity needs on a day-to-day basis, which is why the Fed opened up the repo window. At the same time, people were scared to death that they don't know where to put their money because there's, you know what I mean? So we have the safe haven trade on the one side pushing gold prices up, and we have liquidity concerns pushing gold prices down, and they're kind of sitting in this locked area between 1450 and 1550 and not wanting to break out in either direction. That's the way I see the gold market at this point.
Well, see, my stance on gold, and I've argued this in many places, I argue is the wrong word, discussed it.
Right.
Because when you watch even Fox, CNBC, Bloomberg, they roll out the people when gold is going up. Well, it's an inflation hedge. Right. By the time the inflation sets in, it's too late. To me, gold has and is a hedge against the lack of a true fiduciary in a fiat currency world. Mm-hmm. So you own gold because you worry about, or I do, and I think this I believe it's the right position. It's kept me in understanding so many things as you'll talk about with Jim Sinclair, and Jim and I have had these discussions many times over years, mm-hmm. That when central banks lose their credibility, and that's what we're talking about.
Yes.
We're talking about central bank credibility.
Yep.
In a fiat currency world, gold becomes, it's an alternative currency. It's not Bitcoin. But when you watch the Russians and the Chinese and a few others, or you talked about the Hungarians, they're very aware the Hungarians are building a gold position too.
Yes, they are.
Because you don't need, let's think about the world. We live in a leverage world because credit is so easily accessible. Mm-hmm. When I was talking the other night at dinner with somebody, and they asked me, they said, how much debt do you think the average household in America has carried? And they threw a number at me in the tens of thousands. And I'm not talking about mortgage debt.
Right.
I'm talking about installment debt, auto
consumer
loans.
debt.
And the number was astounding, but we live. So the whole system is always leveraged. I mean, that's what a credit-based system is based on. It's based on credit. That's what the central banks do. So if you're fearful of the central banks losing credibility, the only thing that they have, as you rightly point out, we can call it MMT, whether we're Warren Mosler or Stephanie Kelton pushing this. But if that's your end game is to monetize, then, you as a responsible saver have to have some amount of your assets in what historically has been a store of value. Mm-hmm. Because at the end of the day, every currency, and whether it's the Libra or whatever else you want to put out there, if it doesn't act as a means of exchange and a store of value, it's not a currency.
No, it's not.
And gold, now I've argued this with people, and actually in 2012 I wrote a long piece about it in my blog, because the Bundesbank, and your readers can, or your listeners can go find it. The Bundesbank actually wrote a paper, I think it was published in 2012, about gold-backed bonds. Mm-hmm. Now, I think gold-backed bonds are a very important element in the global system. I believe that the IMF, with its $250 billion now, and that's full value, by the way, that's not notional. They sit on $250 billion worth of gold. Now, of course, it's the members' gold, but it is IMF gold. So every time they come, crying poor, go float about you. If the bonds were backed by 20%, okay, so let's say they issued $1.25 trillion in gold-backed bonds because they had $250 billion sitting there in gold. They could sell those bonds in a heartbeat.
Yep.
In a heartbeat, because you don't need 100% backing.
Nope.
You just want some security, because if it all falls apart, you'll get your original investment back and then some anyway, by having a call on that gold. Now, I know that the rules of the IMF, because I've read the IMF articles of their creation, and I do know what's in there, that there are some who will argue that they can't do that. But I always find it interesting that people who promote themselves as Keynesian by design, and that's not a pejorative. I don't use Keynes as a pejorative statement, by the way.
Right.
John Maynard Keynes was a brilliant economist. Nobody's right about everything.
No.
But he was a great global macro trader too. So I say it with a lot of respect. But those who call themselves Keynesian and who like to cite gold as a barbarous relic, as Keynes would call it, but again, when you put context to it, it means a lot more than that.
Right.
But why don't you use it? Why don't you monitor? Why don't you leverage it up and put it to use? You're telling me that it has no value. Okay, well then people are basically chumps if they buy these bonds. But I think that the world says far differently. So
right. And well, I think that's the point, which is it's like when Ron Paul asked Bernanke all those years ago, what's the role of gold in the monetary system? He says tradition, right? I don't know if you remember that's a statement by Bernanke, and he said, well, tradition. They're like, no, it's because they cannot countenance any kind of competition and accept or admit any kind of competition. They have to say to their currency, they have to say, no, ours is the way things work, and everything else does not exist. And I actually I've gotten better about yelling about Keynes. And now I call most of the guys I really am angry with are Samuelsonians. It's more Samuelson than it is Keynes, who kind of bastardized Keynes and then became the standard economics textbook here in the United States for a generation.
Yeah.
And that's what's so horrifying. So we're watching this play out. You answered your own question effectively, Ira. It's like, why won't they issue gold-backed bonds? They may have to go to that at some point. And of course, we all know, I mean, if we're in the space, that when this next crisis hits, it's going to be bigger than the central banks. And I agree with you completely that, gold is a hedge against government incompetence or the lack of faith in government institutions. And we still are living in the honeymoon created by Bernanke saving the world back in 2009 by coordinating the central banks to coordinate their liquidity, right? The liquidity injections. And that's what they did that's worked for almost a decade. And that's put off the day of reckoning until about now. But that's also created the political unrest that we've seen all over Europe, which is really what I chart as much as I don't get into the guts of the financial stuff in the same way that, professionals do. But to me, looking at the political trends, it's very obvious that in response to this, we're going to have this kind of populism and this kind of anger because of the repression of savers and the hollowing out of the domestic economies and everything that come with negative interest rates and QE and the rest of it. Is the wealth rolls up to the rent-seeking banks and everybody else, has to pay for it. Because that's ultimately what this is all about.
Yeah, Tom, that's right. And again, I raise this point to people because I think it's going to be the most important question. And as I say, I'm mildly bullish on Europe right now because I see what Christine Lagarde is doing.
Right.
And nothing's going to happen in the United States as far as fiscal policy. Okay, Trump wanted to be the builder of America, but politics being what politics is, it was much more difficult. So he got a tax cut, which the corporate side of it I actually thought was a good idea. Mm-hmm. But I thought like all tax cuts, I believe you find a way to pay for themselves. I'm in the camp of Alan Simpson and Erskine Bowles. I thought that they actually forwarded a phenomenal blueprint for America going forward. Of course, nobody could live with it, so it got trashed as soon as it got released. Everybody took it apart, and
I agreed with Trump's. I absolutely agree with Trump's tax cuts. He had to also cut spending at the same time,
and not give the individual. I thought that was you should have paid for it in a different way. You could have done it better, but that's besides the point.
Yeah.
But what the question that will for Europe, because we're in Europe, because what they're going to try to do, and if anybody can tell me differently, I'm willing to listen. But they have $4 trillion, $3 trillion in sovereign debt on their books, not counting the Target 2 money, by the way, as you brought up with the German being responsible for Target 2.
Right.
But they have all of that debt sitting on the balance sheet now. So at some point, they're going to try to create that moving target of a euro bond by consolidating all that into a euro bond.
Right.
Because it's supposedly held by their capital. There's a capital key that exists. We don't know whether it's really been adhered to because there's not a lot of transparency, but that the bonds that they buy are supposed to be equal to the percentage of the GDP of each nation. Mm-hmm. So if German GDP is 20% of the entire EU, they buy 20% because that's the capital donation to support the ECB. So they're going to have to roll them into a Eurobond and think in terms of Alexander Hamilton, because that's really what Hamilton did.
Yep.
When we created these United States of America, because he had the foresight to say, hey, we have to create a debt market. We have to, and he got buy-in because why? He haircutted all the debt of the different colonies. So there was an economic incentive. And he provided a bond market for those who had lent a lot of money to the, at that time wasn't quite a sovereign government, and allowed them to get paid back. So there was a lot of self-interest, but it worked.
Mm-hmm. So no, it did work. It did work. I'm not Hamilton's biggest fan, for a variety of other reasons. But on that front, this is why the Articles of Confederation failed and why the Constitution succeeded. It was because of debt consolidation of the war debt, without doubt.
And as Art Cashin explained to me when I first met him a couple of years ago, he gave me a tour and we were talking about, Washington. He's a great student of history. We were talking about why it is that Washington, D.C. is the capital. Because, again, it went along with the bond program and certain people got bailed out.
Right.
So it was interesting. But the question will be, and we can do another one of these.
Oh, yeah, absolutely. I'd love to. If you would be so kind, that would be great.
But the question that overrides this, and this, Otmar Issing, who was the Bundesbank economist and is really one of the more hard money people and solid thinkers in Germany, wrote a piece in the FT 4 or 5 years ago, maybe less, called No Taxation Without Representation. Because in order to get a fiscal harmonized Europe, somebody has to guarantee it. Okay.
Right.
That's just, and it's always been the German credit card. Do you think that people would be lending money to Greece at 1.5% for 10 years right now without an implied German guarantee?
Of course.
No.
In the same way that you can't underwrite 30-year mortgages in the United States without Fannie and Freddie. Let's be realistic. They created the 30-year mortgage in this country out of whole cloth through the subsidization, through the bank guarantee of Fannie and Freddie. So it's the same.
Exactly. So the question will remain this, okay? And is the implicit guarantee of the ECB, because that's what we're talking about, is the implicit guarantee by the Germans, as the world investors understand it, because who else would buy these bonds at these ridiculously low rates?
Right.
Is that a form of fiscal stimulus? Because when you have the taxpayers of Germany on the hook,
right,
whether anybody's ever asked them or not, but when it's implied that they are on the hook for guaranteeing the EU project, is that not an act of fiscal stimulus? And will that be the German fallback position?
It's very possible. Looking at the German stock market, this is something I chart on a fairly regular basis. You can see that the DAX is pushing up against this 2018 high right now, right, as we close out the year. So I think we kind of round this out because I know you have to go. One of the things that I've been saying about the German stock market is the following. We have the political problems of the SPD having to push left and undermining Merkel. And potentially undermining the coalition, though I don't think it's going to happen anytime soon. Maybe sometime by the end of Q2 of next year. But the early signal may be that if we don't see a violation of the 2018 high to the upside on the German DAX, that's the market saying we're not convinced of Germany's situation right now because, the German economy isn't strong. And it's actually, the PMI numbers are terrible. So to me, I think from a technical perspective, I'm looking at it going, are we getting a non-confirmation of the 2018 high here in 2019 on the German DAX versus what's happening with the Dow, right? Where the Dow continues to roll higher. And is that a function of dollar liquidity and euro dollar and the draining of the euro dollar markets?
I just had this exact discussion. So you 10 times last week because people were surprised when I started discussing that I'm getting bullish on Europe because I believe we're going to see that massive infrastructure program and Lagarde is going to get it through. What's going to be the buy off? I am not sure. But when I saw Wiedmann had, the FT had a piece, Wiedmann was publicly apologizing to Draghi for being overly caustic in the ECB meeting. So there are things afoot. Now, Germany is, again, see the popular narrative, and I love nobody's work on narratives has been better than Ben Hunt from Epsilon Theory. I don't know if you.
Yeah, every once in a while.
Yeah, he's very in depth, but Ben writes some really great stuff. But it is the narrative, and the narrative that they want to spin in Europe, of course, is that Germany, the rise of the more alt-right, I don't know what we really want to call them, but of course the Alternative for Deutschland, the AfD, which started out purely as an economic, in defiance of the ECB, by the way. It was started by five noted economists. Now it's lost its way. And the popular narrative is that it's just basically a know-nothing, but equivalent to the know-nothings, and that they're anti-immigrant. But don't buy that narrative. There's a lot of support for them because Germany has been getting crushed through financial repression by the ECB. And don't think it's not intended, by the way.
Oh, no, I know it's intended. The same thing and I also feel that way about the Russian sanctions as well. Right. I mean, because Bavaria has gotten gutted.
That's
just gutted.
But as I say, if you don't think Macron goes to sleep at night praying for a recession in Germany so that it would unleash the forces of fiscal stimulus, and that's what Lagarde's trying to do. And the Italians would celebrate it because Salvini, of course, even though he's not in charge yet, but he certainly
will be.
Yeah, his shadows. Yeah, and you know what? And it's there, and you have to deal with it. But the financial repression and the crushing, and I use that phrase exactly for what it's meant, the crushing of German savers, and that's without them going to negative interest rates on actual savings accounts, but zero with inflation running 1.8%, 1.7%, 1.6%, whatever numbers you want to choose, is a negative real yield, and that's what we concentrate on, Tom, is real yields.
Right.
Now, everybody, and I know everybody wants to compare it to Japan, but Japan, when they went to zero interest rates, they had real deflation. So if you were and 97% of bonds of JGBs in Japan were owned by Japanese domestic savers of one sort or another.
Right.
So when you had deflation of 1% and 1.5% and 2% a year, and even though interest rates were 10 basis points on a 10-year, you were getting a real yield of 2%.
Right. And real yields of 2% are solid. I mean, real yields of 2% are great, right?
That would give me a 3.5% 90-day T-bill right now, I think.
Yes, yeah. Well, and now think about why. Now go. Since I studied the Russian market a lot, because from a geopolitical standpoint, Russia's fascinating to me. Look at the real yields that you're getting in the Russian market, right? I mean, it's astounding, and I've been saying for a long time that the spillover effect of the safe haven trade is going to be that you're going to see the Russian stock market and the Russian bond markets go to the moon, and that Navalny needs to cut interest rates, which she finally has.
My biggest holding right now, RSX.
Yep. No, Gazprom.
Oh, gas.
I know I like Gazprom because it's a great story. So geopolitically, it's a much more interesting story than RSX.
And we'll end with that because we know who's highly involved. Gerhard Schroeder, the previous chancellor to Merkel. And can you imagine a U.S. president sitting as chairman of the pipelines of Gazprom? I mean, come on.
Right.
And those sanctions are coming off, and that has nothing to do with Trump, because the Europeans are pushing for the removal of the sanctions.
Well, it's going to come. Merkel just needs a way to save face. And I think that the meeting between the Normandy 4 meeting today between Putin and Zelensky, because we're doing this on the Sunday, December 8th, the meeting between Putin, Zelensky, Merkel, and Macron is to finally set like the final way for Merkel to save face, because she's had her red lines about these sanctions, and Putin is consistently removing them. So if there's a gas transit deal between Gazprom and Naftogaz, fully expect that by the end of Q2 the sanctions will come off.
Yeah, this can be our next session because
absolutely, that'd be great. I would love to talk. I'd love to talk this stuff with you. So I'm happy to cut it off here, because if we don't stop, then you're not going to be able to get on with your day, and that's fine. Yeah. So, Ira, this has been a real pleasure for me. I've really enjoyed it, and you're someone. And by the way, he's mentioned it multiple times in this podcast. His site is Notes from Underground. His blog is something I used to read, and then I went back and I read stuff earlier, and I just forgot. Just kind of got out of my search pattern. I was preparing for this interview, and I started and I read the last 3 or 4 posts. And I'm like, why aren't I reading Ira on a regular basis? What's wrong with me? And because it's all really good stuff. It's all very supportive of many of the same themes that I have at this point. So for everybody, this is good stuff. I've really appreciated it. Ira, I know you got to go, so we'll just end it here. Thank you so much for.
All right. And our next thing, we'll pick up on the significance of Russia, because Putin is a very interesting guy, regardless. And Fiona Hill, who really gave great testimony last week and wrote a great piece in 2016 about Putin. Putin is not to be underestimated. Yeah, I know a lot of people in the State Department like to diminish it because they think that Russia has had it, but and they all point, now I will really end it, but because will be incendiary. But people talk about Russia and Crimea, and then if you go down to Florida and you look out and you see Guantanamo, I'm wondering whether people can connect the dots that Crimea is to Russia what Cuba was to the United States in protecting the flow of goods out of the Gulf of Mexico. You know what? Yet we still maintain a naval base in a sovereign country called Cuba. I know we leased it from them. I know.
But it's like everything else. So absolutely. Putin is not to be underestimated. In my opinion, he's right now the best world leader on the stage at every level. And
he's a thug in some ways, but he's the most interesting because he does, like the Chinese, he does have a much further looking perspective, and he knows his strong hand. Yep. Nothing will go on in the Mideast as far as any type of conciliation without the Russians involved.
Yep, absolutely. All right, Ira, you have a great the rest of your Sunday. We'll talk. We'll do this again real soon. Now, right. I appreciate it. Maybe after the first of the year. All right, you take care.
All right,
bye bye. Well, I hope everybody enjoyed this chat with this week's guest, Ira Harris. Do really want to have Ira on again after the first of the year. Just want a quick programming note. You can, as always, if you like this podcast, you can follow it on Spreaker. You can find it on iTunes and iOS, as well as iHeartRadio, Spotify, and a few other services as well. You can follow my work over at tomluongo.me. You can support my work over at Patreon/GoldGoatsAndGuns. And you can check out Ira's blog over at iragharris.com. That's YRAGHarris.com. Other than that, I think that's a wrap for this week, folks. So y'all take care. You be well. We'll talk soon. We'll talk next week. Keep your stick on, guys.